Hello traders, Gary Wagner here. Approximately 1:30 in Honolulu, 7:30 in New York on Thursday, 16th day of May, 2024. And this is the evening report for gold and silver. Considering what gold did on Monday and Tuesday, today's price decline of about $9.40 was not really significant. We did send out a trade alert. What we're looking at is an inside trading day and can also be analyzed as a bearish harami. Although to complete this pattern, you would need to see this candle here forming is a large red candle with a lower low than the opening of today's market. Personally, I do not see that happening, and I believe that we will move to higher pricing. We did send out a trade alert to enter gold from the long side. We will cover that when we pull up our technical studies. Silver has been trading in a tepid manner when we look at the price range after this tremendous large spike that occurred last Wednesday. Today, silver gave up about 10 cents, 9.5 cents. That is a decline of 0.32%, taking the most active July contract to $29.81. The dollar had moderate gains today, gaining 0.22%, taking the index to 104.534. Because gold challenged $2,400 per ounce yesterday, even though it was unsuccessful, it is my belief that there is a high likelihood or probability that it will attempt or challenge that price point again. In the words of Steve Nissan, it will create a beachhead in which it begins to trade sideways above that price point, 2,400, effectively making that a point of resistance. That is why we sent out a trade alert yesterday, just before the New York markets opened, to buy June 2024 gold at the market. Gold was trading at $2,378.60. That is where we're marking ourselves in. That would be right about here. Currently, gold is trading above that, but not by much. We do have a good till canceled stop at $2,361.20. So traders, if I do not think the bearish harami will result in the market trading lower, but trading higher, where do I think gold could go in the short term, and why do I believe it could get there? On a technical basis, we're looking at different levels, but realize that the market has been moving on optimism and pessimism regarding the next steps of the Federal Reserve. If they implement a rate cut in September, which is widely expected, I think will be business as usual, so to speak, and gold will continue to track higher. I've put in two Fibonacci studies. The first one is an extension that is this line going from here to the all-time record high and culminating here. The second study that we're looking at is a fib retracement. A fib retracement, the opposite of an extension, in the case of the move from 2158 up to the record high, a 50% retracement means that it came down or gave back 50% of the move. This is 23% of the move. A deep retracement is considered a 61.8%. And these numbers are Fibonacci based. The 61 would be $2,272. Now, after the rally going to the all-time record high, gold did correct, and it came down below the 50% retracement and above the 61% retracement. Traders, that is a acceptable correction. It is deep, but deeper would be 61 or even 78. Nonetheless, this is a valid correction. It absolutely has traded off of this. Now, here's where it could go either way. When we talk about corrections, simply put, we can get something called an ABC correction, where the market moves up. This is our A right here, this first move down. This move up would be the B, and it would be followed by one last move down to complete a 3-cycle correction. If that's the case, we'll know, because it will not be able to challenge 2000 with any kind of power and stay there. It will look to come down and come down fairly quickly. If, as we believe, it could move higher, then we want to use the different levels on the fib extension. The first one being 2431, the second one being 2466. Realize that even if we're looking for a market to move from X to Y, it doesn't do it as a linear line up, but rather a stair step. We'll have to see how these stairs work themselves out over the next couple of weeks. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.